Hello, investors. It's Don Vandenbord, Senior Portfolio Manager with Revere Asset Management. Today is Tuesday, October 18th, 5:15 p.m. Eastern Time, coming to you from St. Augustine Beach, Florida, with tonight's Revere Market Insight video. State of the market, we are still in a correction. Bulls are trying to pull themselves up by their bootstraps. You can see over here on the trend gauge. We've got leaders hanging neutral with a green arrow. Still plenty of stocks above the 21-day exponential moving average. Whether or not they're fantastic growth leadership quality, that's still up for debate, kind of lacking, if you ask me. But we're going to run a screen today and show, since today was day 4 off the bottom, we're going to run a screen looking for liquid relative strength up on volume stocks on a day like today. Today was we're wondering throughout the day whether or not the indices were going to have a day 4 follow-through day. Obviously, what's lacking is a huge number of breakouts from sound bases on this follow-through day. There is some leadership, and we'll touch base on that as we go through this video. But you want to see what's up on volume on a day like today. We had a big gap up, but we faded, unfortunately. But a little bit of strength coming into the end. There were opportunities for the bears to take the ball away from the bulls, at least on a very short-term basis, and I think they failed to do that. We'll get into this more as we go through this video. So leadership neutral with a green arrow. Short-term, we've now got 4 of the 5 indexes above the 21-day exponential moving average for at least one close, as the S&P 500 basically closed just a sliver above the 21-day exponential moving average. So the green arrow showing there, sliding a little bit more toward the neutral column. And a big day today will put it all the way over to bullish. Actually, it won't, no, because we won't get, the best we can get tomorrow is day 1 for the NASDAQ 100. Up above the 21-day exponential moving average. So medium term, the 50-day moving average and the 200-day moving average, all 5 of the indexes still trending below those, and the slopes of the line are declining. So what happened today? I kind of mentioned it. Gap up, big gap up at the open, 2.2%. But that was, we opened basically right at the high of the day and then started to fade. And when you fade, this was the second straight gap up, remember. When you fade, the question is how far are you going to go down? Are you going to go down to a support level that's going to hold, or are you just going to completely break down? And we did hold. Basically, the initial pullback was to yesterday's highs, and then we bounced nicely. And then after 2 o'clock, some news came out about Apple cutting production already on their new iPhone, and that sent the market back to certainly red on the NASDAQ 100, but back near the barely above, barely positive on the S&P 500. But we did rally into the close. In fact, Apple ended up closing positive, so it up $3 off the low of the day for Apple, so that's 2% despite some supposed negative headlines. So green on the close, as you can see, G6 up 1.3%. This is our 6 ETF composite that we use to keep track of the growth arena. S&P 500 up 1.14%, NASDAQ 100 up 0.8, Dow up 1.1, midcaps up 1.45, Russell 2000 up 1.2, Global Diversified 60/40 stock and bond up 0.66. We were slightly negative in-house today. That's because of the small remainder of the short that we had on from Friday. That gap up, first attempt to get out of it we did when we started pulling back, and then we started going to the other side when we bounced off of some support areas, and you'll see the moves that we made today when we get into the tail of the tape portion of the video. And then, as I said, we're going to run that screen. So let's get into what we do here at Revere and why we do it. We are trend followers from the standpoint of what are the indexes doing over 3 time frames, what are leading stocks doing. You can see the 3 lines here, the green line being the short-term 21-day exponential moving average, the red line being the medium-term 50-day moving average, the black line being the long-term 200-day moving average. Why do we track these? Because Our job at Revere is risk management. There are several ways to get returns in the market. You can be a dividend player, you can be a strictly momentum player, you can be a day trader, you can be a buy and hold. But I don't really understand why anybody would want to buy and hold the indexes when you can see some of the drawdowns that you can get with the S&P 500. I mean, I literally have seen a family member of mine get decimated back in 2000 when the tech bubble burst, and they were with a big name broker, and they did nothing to protect him, and he lost over half of his money. And one of my life goals when I decided I wasn't going to be in IT for the rest of my life was to get into managing my own money, but also managing other people's money. And I truly believed, based on what I found with William O'Neill and Investors Business Daily, that you could manage money and manage drawdowns and participate in the uptrends and outperform the market. And that's what we attempt to do here at Revere. You can see the last 6 severe bull markets down in bear markets, sorry, down an average of 44.5%. You need an 80% return to get back to even. If you're going into retirement, you're going to be petrified at losing that much. And you don't have to worry at Revere because risk management is our job number one. You take control of your drawdowns, and the returns will take care of themselves when the bull market returns. So basically, if you're trending above all 3 time frames, we are as long in the market. We have as much exposure as we comfortably can have. If things start to roll over, we back off a little bit. If they really start to roll over severely and the slopes of the moving averages roll over, we raise even more cash. And if we break below that black line, that's the 200-day moving average, that's when we are fully defensive. And the reason is that all of these numbers, all these bear markets, every one of them occurs beneath the 200-day moving average. So once you get under there, we just change our mindset. At that point, capital preservation is paramount. Now, that doesn't mean that we won't get involved in the market if it attempts to rally. We got back into the market and followed this trend higher from July through mid-August. We got back in last Thursday with this big positive reversal. Got stopped out on a couple things. We got back in today when we got back above the 21-day moving average. So we have several rules to get us back in. And if you're interested in a common sense approach like this, it's never too late to sell if you have a plan to get back in. That's the key. That's what I'm trying to communicate here. Give us a shout. You can email don@revereasset.com. That's me, or my partner Dan at revereasset.com, or call 855-REAL-WEALTH. That's 855-732-5932. We'd love to talk to you about becoming a client. So there's your S&P 500. You can see today, let's bring up a 5-minute chart. Here's your big gap up, 3763. So that got us above this 3700 area that had been resistance. Really, it's a range, 3700 to 3730. And then we started to fade. So we're just watching this. We got out around here of our remaining that SDS position that we had. So took a loss on that of about 0.15%. Versus the overall portfolio. And then the question is, where are we going to bounce? Well, very often you fill gaps, and that's what we did today. Yesterday's high was around, hovered around 3686 to 3690. We got as low as 3686 and started to bounce. We started taking positions in VTI, which is a large cap. Basically, it's SPY with some more mid caps and small caps mixed in. It trades basically in line with the SPY, but you get a little bit of a small and mid cap flavor in there. And we added to it twice, so 3 total buys of 10% each. And we're we closed the day mildly negative on it, but if you count after hours, the indices are moving higher. We're positive on it. So again, here was an attempted breakout here at 1210 today, and then we tried to pull back 3703. It held. I don't know what came out. The algos just turned on. Is what it looked like on smaller time frame charts. And then we ran into this 3734. Couldn't get above it. Here's when the Apple news came out. Back, didn't quite get to the lows of the day, and then rally into the close, which was certainly good news. So that's where we finished on the S&P 500. Let's go to the NASDAQ 100. Weaker. This is the weakest of the indexes. We got above the 21-day on the gap up, but could not hold it. And we broke back through it on the downside very quickly. You can see almost like a waterfall here at the open. Not only filled the gap, but went lower, and then actually made new lows on the day when this Apple news came out, because Apple is such a big weight in the NASDAQ 100, but still did do some recovery into the close. So the NASDAQ 100 is the only one of the indexes not above the green line, the 21-day exponential moving average. And on the S&P, that line has flattened out also, so that's a positive. Let's go to the Dow Jones Industrial Average. Showing some big relative strength over the last week and a half. It had the big shakeout too on Thursday, the negative reversal on Friday, inside day on Monday, gap up on Tuesday. So at new highs relative to this recent range that we've been in. Let's take a look at that range again for the S&P 500, and we haven't gotten over that yet. So that 3807 area will be a big area for the S&P to get above. The Dow, on the other hand, has cleared it. Some good earnings from some Dow components helped it attain that today, as it is a price weighted index, and definitely outperformed today. So now let's go to the mid and small caps. Mid caps first. These have been showing relative strength, just kind of in line this week. You can see the relative strength line flattening out, but for the prior 2 to 3 weeks, working well. Got above its range from 2 weeks ago, but gave it back up, but still higher high, higher closing high, second close above the 21-day exponential moving average. So good stuff there. And then IWM closed right on the 21 yesterday, or right below it, but either way, gapped up, got above that recent high, but pulled back below it. So that those recent highs from 10.4, 10.5, 10.6 are still proving to be resistance on all these indexes except for the Dow. But you can see with, actually it is the second close above the 21 for small cap. So that's why we slid the arrow in. Also, the stochastic making another attempt. This is its third jagged move higher and a higher high today on most of the indexes. So that's a benefit to the indexes and a tailwind for stocks in general. Let's go to Bitcoin real quickly, see what that's doing. Not much movement today, down 2%, but it's been in this tight flat range. Let's go to the VIX. VIX pulled back again today, but still holding above that 21-day exponential moving average. A break below that level will be a change in character, and if it breaks below 30, that was kind of a battleground area here a couple weeks ago. That will definitely be a change in character that will help stocks. How about the dollar index? Tight close for the second day in a row, holding this 21-day exponential moving average. A move below there, again, will be a benefit to stocks. Let's go to TLT, the long-term bond. Hammer today, so stopped going down is, I guess, the best thing you can say about the 30-year. Let's look at the yield on the 10-year, 0TNX. Try to make a new high, closed below this 40 level, which equates to around 4%. So some digestion going on there. And Dan always likes me to talk about gold. Inside day on gold, still an ugly chart. So let's go to the tail of the tape now, see what's new. Technical, back to green, another attempt at higher highs with this daily stochastic hookup. We already talked about the VIX, fear and greed, up to 34. So some nice moves over the last 3 days on fear and greed. Couple of attempts here to get the bull case back. 4 out of 5 indexes, as I said, now above the 21, and since 10/13 last Thursday, we had that big undercut and rally, which the lows of which have held, but overall still operating under the bear case, need a little bit more strength. The news, I talked about the Apple iPhone production cut. Also, Biden's supposed to announce additional release from the Strategic Petroleum Reserve in an attempt to buy votes before the upcoming election. S&P 500 went from one day up to the second day up. Expectations coming into today were neutral with the volatile up, down, up. And then the gap down. Overall positive, though, as we did hold 3,700 up into resistance 1 area here. This is a big resistance area, this 37.15 to 37.30 area, and up into the SR level around 269 to 272 on the NASDAQ 100. 11 out of 11 sectors up today. big move up on ITA. This is aerospace and defense and also industrials. Down today, all commodities, nat gas, oil. This is tied to the Biden announcement. And then agricultural commodities down today, and also the CTAs, or managed futures. Focus coming into today, wanted to see what was going to be up on volume. When we saw that pre-market gap, I told the fellows on the morning call, anything that's up on volume, that's quality, bring it to my attention. We want to make sure that we're not missing anything. And then also wanted to add to HLIT as it was acting well, and it continued to act well. And then focusing on the big three sectors that have been holding up: energy, financials, and healthcare. And then, of course, the indexes and the dollar versus the 21, as we've been going over. So what do we end up doing in-house today? I talked about how we sold the SDS. We bought 10% VTI 3 times, so we have 30% exposure for that. And HLIT, we added to that. This had a nice close today. You can see it made higher highs above. Look how volume has, and this red line, which is the trending average daily volume, very clearly being accumulated, not breaking below the ADMA. I wish this was more liquid so we could really pile into it. But for now, we added our 1 position and made it a 1%, and now a 2% position. We just can't load into that because if we have to get out, we'll move the market too much, and it was kind of a chore to add that 1% that we did today. So bottom line, gap up, fade, rally to mid-range, above the 21 or right on the 21, actually slightly above, and then for the 5 indexes above the 21. S&P closed 5 points above it. So let's take a look at the next resistance area is this 38.13 to 38.15. That's a big area. We broke back below it on 9/21. We're around this 37.15 to 37.30 area, above the 21-day exponential moving average, which is also in that range. So, all in all, I'd call today a win for the bulls, certainly. Let's get to the screen now that I threw together. So, what do I look for, and what am I screening for? What did I specifically want to look for today? So I set this screen up. MarketSmith, the universe has 9,704 tickers in it. I wanted volume percent change versus the 50-day moving average to be at least 40% above volume. I was interested in volume today. We need liquidity. In this case, we prefer $100 million in liquidity, but I don't want to miss anything on a day like today, because some things like HLIT, you really want to get into them if the quality is there, even if you have to size down. 50-day average volume, 25 million or more. I want the 3-month relative strength to be at least a 70. I wanted it to be above the 21-day exponential moving average. Wanted to see at least a 1% price increase. Don't want any cheap stocks, so $15 minimum. Definitely want it to be above the 200-day moving average, and an up-down volume of about at least 0.5. So this narrowed the universe down to 18 stocks. Here is the full list. And we're going to sort them by volume. None of them have a massively outstanding up-down volume, but it is something that you want to pay attention to. Here's the 3-month relative strength. Here's the price versus the 21-day exponential moving average. Price percent change on the day. And let's just take a look at the charts and see if anything jumps out to us. A couple things did jump out to me today. So let's start with DCP, oil pipeline stock, forming a nice base near its high, liquid enough. Not a surprise to see oil stocks on there. We know that they've been good. AEHR, this is probably the second best to me chart behind HLIT. It's been basing. It's test equipment for silicon carbide semiconductors. Gap up today above average volume. And consider this one of the canaries in the coal mine. When you want it to keep this gap up, you'll notice I've set alerts above today's high and below today's low. This is definitely a stock I would like to work my way into. The problem is it's got about a 9% ATR and it's thin. You can see it was up 10% today. That's pretty typical of the action in this stock. It's definitely a wild one, so we would have to size down. The relative strength is there. All the metrics are there from a fundamental standpoint as well. MMP, another oil stock. MPLX, another oil stock. Northrop Grumman. Now, Lockheed Martin reported earnings. Lockheed is not on this, but it was basically flat pre-market, and then people just started buying it hand over fist all day. In fact, they were buying Lockheed Martin, General Dynamics, Northrop Grumman all day. Look at the accumulation here. It tailed off a bit toward the end of the day, but when you get overbought like this and you stay overbought on a 5-minute chart, it just means that everybody is buying as much as they can within reason, not to move it. 300% above average volume, up 8.7% on the day was Lockheed Martin. They reported earnings, so we're certainly going to put Lockheed Martin on our watch list. From a scanning standpoint, Northrop Grumman was the one that came in with the fundamentals. We talked about this a little before. It's been on the 21 over 21 list. Epic failure on Friday, breaking below it. Didn't exactly know why, but the comeback kid today getting near the top of the range. So, and ITA, as I said, one of the leading sectors today. WGO, Winnebago, gapping above earnings tomorrow. I don't know if this is a precursor to good news or not. PE all the way down to 4 on this. These are expensive products. A little surprised to see it holding up in this economy. IBKR, Interactive Broker, attempt to break out, reversed and closed in the bottom part of the range, but certainly good fundamentals. We know that this is good fundamentals. Here's another. This is an actual, absolute, legitimate breakout from a flat base. It's liquid enough, trade 735,000, and it's a $100 stock. So certainly liquid enough, and that's just a legit breakout. Relative strength at a high along with price, closed at the top of the range. This is what you want to see. It doesn't have massive growth numbers, PE of 23, only growing earnings 4% next year and 11% the year after. Sales only growing 13%. If you had better fundamentals on this, you'd certainly like to see them, but this commercial services consulting group has had a couple of decent looking bases in there and certainly showing relative strength over the last 2 months. So Booz Allen Hamilton, it's a consulting company. Breakout, another one that we want to consider a canary in a coal mine. You can see I've got some alerts set for that to see how it continues to act. STNG, this is oil tanker shipper. 6 straight up days on volume, just making all-time highs, very clearly being accumulated. AMLP, this is an ETF of MLPs in the oil sector. IDX, sorry, IDEX, it's IEX, machinery stock, don't know a lot about it. Nothing really jumps out at me on that, although it is holding up and forming a cup and handle. CMC, this is one that was a former leader, but it failed on this double bottom, but base on base, you always like that. That means that it's not going away. Relative strength at new highs and had some volume today. HAE, medical assistance, or medical systems and equipment near the high of the range. This is a pretty nice flat base, but really it's just a longer handle to this long flat base. So definitely showing the relative strength. UNM, it's an insurance stock, not really excited about that, but showing relative strength. RGen, medical products, got above the 200 and the 21. This looks like it's putting in, could be the handle in a longer cup and handle or a flat base by itself. BWXT, electrical power equipment, double bottom base, big volume, relative strength. Don't know a lot about it, but that's the purpose of running these screens, is to find what's going on with stocks that are up on volume on a big day. Now, Deckers, here's another one. Notice I've set an alert for the low of the day. This is a decent, it's not showing up on pattern recognition, but this is a breakout above these recent highs. Had this one big shakeout day here to the 200-day moving average, but Deckers showing relative strength. Decent numbers, certainly, and it's really the third canary in the coal mine as far as breakouts. We want to see what they're going to do. TOST, another one. This is a credit card company getting above all the moving averages today, as it had really been tight over the last few weeks. And that's it. Those are the 18 stocks. So BAH we want to monitor. We want to see the defense stocks. I want to watch what Deckers does. I want to see what AEHR does and HLIT. So that handful of stocks there is something that I'll be keeping my eye on going forward. They showed up first on what was day 4, just barely missed being a follow-through day. We did have volume on the indexes, but a nice list. And this screen's got to screen constantly to find new stocks. So that's going to wrap it. As always, like to hear from you. Reach out, don@revereasset.com. The phone is 855-REAL-WEALTH. That's 855-732-5932. Remember, it's not how much you make in the market. It's about how much of that you can keep. We weathered the storm on this big sell-off. Down single digits year to date, while the S&P 500 has been down as much as 26%. First signs of life in the past couple of weeks since we failed at the 21 here on 9/13, and since 8/26 when Powell jawboned at Jackson Hole and sent the market to this third leg down. We don't know if it's going to hold, but we know we've prepared ourselves and put ourselves in position to succeed if it does. And we'll see what the next day brings. So ending up Tuesday, August 18th, this is Don Vandenbord with Just the Facts. Thanks for listening. Please pass our work on to anybody you think would benefit, anybody that's been concerned about their money manager not doing anything, or if they were managing it themselves and was just a frozen deer in the headlights, not knowing what to do. It's never too late to sell if you have a plan to re-enter. We've got sell rules, we've got buy rules. Feel free to pass it on. So I'll stop talking now. Thanks for listening and have a great day.